Hi, and welcome to this video blog or vlog. I thought I would try and do something a little bit different today to share some of the tools that I use in Thrive that help my business to work and to see if they're of interest to you. Today, I wanted to talk about something that I created when I started my business and before I was ready to purchase accounting software or cash management software. And even now that I have it, I still use this as a backup tool for me, just to help me with some of my calculations. So this is an Excel spreadsheet, so it's really transferable, really easy to use. It's got some formulas built into it, and what it does is it helps me track the income coming in to my business. So I'll show you in a minute. It's an invoice tracker, so it's a listing of all the invoices. But what it also does is it helps me allocate funds. So something that I see in lots of VA groups and lots of discussions that are around the place is about how you go about making sure you're paying your super and you've put money aside for tax and that sort of thing. And it's really, really important. I am by no means, full disclaimer, I am not an accountant. I'm not a BAS agent. I'm not anything else. I'm just a business owner myself who has had to figure this out for themselves. I've applied a little bit of my experience from the corporate world and my experience in working with formulas and tracking. I used to work as a practice assistant at a major accounting firm for a period of a few years. So I understand some of the requirements and the rules, which has helped me to put this together. But at the same time, I spoke to my accountant and I asked about what I should be doing, and you should absolutely be doing that. But what I wanted to do was share it with you and show you how it works and why I use it and how I use it in my business. So this is a simplified version of my current spreadsheet. So this is the one I used when I first started, and it's now expanded. You'll notice if you purchase any products with me or if you've worked with me before, I now include GST, so it's a little bit different. And I have expanded some of these options as well because I've started working with something closer to a profit first model. But this is how I started. So I'm going to share my screen. Bear with me. So I'm going to share screen. I'm going to do this one. Okay, so this is an Excel sheet. I'm going to just make it completely visible for you because it will make life much easier. So it's a business income tracking tool, and it works in what I would consider, I'm just going to pop myself down there. There we go. So it is a really straightforward tool that I think helps on a couple of levels. It's an individual invoice tracker. It also helps you track your superannuation, your PAYG, how much you should be leaving aside for your business expenses, and then what's left for you. It also does a monthly summary, so I'm going to show you that now. So this section down the bottom is where you would pop in each individual invoice that you put in. So I've got an example one here. So obviously this would be paired with having a Word document or an Excel document that you use as your invoice. If you're generating invoices in an accounting system, all of this information will be part of that system. This is for people who don't have that. So you would have a separate document that you're using to create your actual invoice that goes to a client. So this one here, invoice date. I'm gonna bump this up so it's a bit more visible for you on the screen. That looks a little bit better. So this column here, column A, is your invoice date, and it has the date that I've issued the invoice. So this is the date I've raised the invoice and sent it to the client. Then the date that it was paid, or the date that the funds come into my account, the invoice number, and you can use whatever system you like, obviously, and the invoice amount. So let's play with it so you can see it working in real time. I've put it in as 100, but I'm going to now put it in as 1,000. So if I put 1,000 in there, okay, so $1,000 here. This column E, calculates superannuation, which is as a voluntary contribution as a sole trader. Now I'm obviously a sole trader. If you are a corporation, things are very different. As a sole trader, which a lot of VAs tend to start with, and as I started, 10% is what I allocate for my superannuation. So if $1,000, it's calculated, that's 100. PAYG, again, this is based on what my personal situation was, and the sort of guesstimate practice is about 30%. So it's 300 of the 1,000. I then allow 20% of every invoice goes towards my business expenses. And that's, I actually move that into an account, and that's where I pay all of my direct debits. It's where I pay for memberships and subscriptions. It's where if I have to go to Officeworks, heaven forbid, that's where I would pay for that from. I have a card that's attached to that particular account as well. So that's my operating expenses, and it's taking 200 of that. And then the balance that's left is my salary. And that is what I would pay myself out of that invoice. So for me, out of $1,000 invoice, I would receive $400 on this model. Now, you personally, your particular situation may be different and your percentages might be different, which is fine, but this is the way I've set mine up. And then I would pop the name of, I like to keep track of which, the invoice number doesn't mean much to me, so I would pop the client name in. The other thing I can do, if I go, okay, we might have then, I'll just do some examples where we put a couple of invoices in. So we'd have 1,500, and I'll put this as client 2. And then we might also have IMV 03, and that might be $100, and that will be client 3. So what you can see is that up at the top here in this blue section, I've got some summaries. So the spreadsheet has a formula in it that will automatically calculate from here. It calculates from this point down. So if I highlight all of these 3, and you can see down in the corner here, so it's saying that the sum is 2,600, and that matches there. So that's how I would do that. The other thing that I might do is I like to keep a running total per month, because I do my transfers per month. Depends on how your business operates, but if you do retainer clients and you only invoice once a month, or if you prefer to do things invoice by invoice, that's fine. But for me, I just do it as one set of transfers a month. So I take, what I would do is I would say, okay, let's pretend that this one went out on the 31st of the 7th. Sorry, let's make it the 30th of the 7th, and then this one went out on the 1st of the 8th. This one was paid on the 31st of the 7th, and this one was paid on the 7th of the 8th. So if I'm looking to complete my July total, what I would actually do is I would just go, okay, so that's my July total. It's 2,500. And if you can add that up in a calculator. You can do a sum on it. You could, once you've got your totals here, you could do a sum in here. I haven't set it up that way. So I would say, okay, that's 2,500. So I'll put 2,500 in there. And you can see that my super payment is $250. My PAYG based on 30% is $750. My operating expenses is $500, and I've paid myself $850 for the month. So if we then said, okay, so then there might be another 1,500 and a 100, then that for that month would be 1,700, and I would pop that in there, and you can see the difference there. So I can track the monthly totals. This is every individual invoice, and this is my overall year-to-date total. So it gives me a snapshot of lots of the content that you would normally get out of an accounting system without having to be paying for that, particularly when you start up and you might be doing invoices that are really small, or you might not be doing enough. You might be still doing this as a part-time thing around your job. You might not be earning enough to justify the expense. There are lots of different reasons, and it's all completely personal choice. But this is the system I use. This system also has a really handy, that's the year income tracker. I've also got a sheet, so when I make my superannuation payments per month, I can just track them. And I actually set myself a goal for how much I want to put into my superannuation. I think it's a really, really important thing to do as a business owner. And I also have a sheet for tracking my mileage, because I don't have a business vehicle, and sometimes I have to go to client sites. So at tax time, I need to know how many kilometres in my car I've done. So I have that as well. So I'll just stop sharing. So this tool is something that I have used since I started my business, and I've made it really, really important I decided very early on in my business and in consultation with my husband about our situation that we were going to make every invoice I received, I was going to pay my superannuation. So since I started Thrive in January 2020, every month I've been putting 10% of my total income straight away into my superannuation as a voluntary contribution. Obviously, you should speak to your financial advisor or your accountant, and everybody's situation is really different. But I genuinely believe that paying yourself superannuation means you're taking yourself seriously as a business owner. You're investing in yourself for the future, because you don't want to finish your business and be ready to retire and not have any money to actually continue to live the lifestyle that you started your business to have. I also, because I've done it from the very beginning, I don't consider it part of my income. So that spreadsheet, when I break it down, the only money that comes to me personally is that last column. It's that salary column. And I pay that to myself once a month. And I do it as a transfer from my income account, so where people pay my invoices into, and it goes in and I say, that's it. That's the amount I've received from my business this month. That's my salary. So that's after tax, it's after superannuation. It's the same as treating myself like an employee of my business, in the sense that I have some very clear boundaries. 30% of my income every month goes into an account that I keep aside for my tax. 10% goes straight into my superannuation, and 20% goes straight into my business account. So it's a really, for me, if anyone knows me, they know I love a spreadsheet and a form and a system. So this works really well for me. It's the kind of thing that I've realized that a lot of people would like to have, but don't have access to, or don't know how to start doing that themselves. So that sheet that you've just seen is now available in the Thrive shop. So I will pop a link to it in underneath this video, and you can head to the shop and pick it up and download it. And you can refer back to this video as well at any time to be able to see how I use it and what I use, what each column does, and how I've used it. I'm going to start sharing a bit more about this, about the tools and the systems and the way I work with Thrive, because there are elements that I use that are transferable to lots of different businesses if you're a freelancer or a virtual assistant, but also because I think it's really important that you take yourself seriously as a business and you treat yourself like a business, and you're prepared for the obligations that come with that. So while it's not a Word document, which is something that I specialize in, it's a really, really important part of ensuring that Thrive is able to stay around and meet its obligations and be able to continue working. So if you're interested, you can head to the Thrive shop and get your own copy. I'm always happy to answer questions about how to use the sheet, or if you have a problem with it once you get it, you can certainly get in touch with me. If you have a sheet of your own or a system of your own that you use, I'd be really interested to know what you use. So add a comment or get in touch with me and let's have a chat. You will find me on Instagram, on LinkedIn, and on Facebook. And it would be great to see how you're treating yourself in your business and making sure that you are investing in yourself.